Everybody knows that it's good to have a checkup every once in a while, but we haven't done a checkup on the consumer in some time. So let's take a look. Did you know that the U.S. consumer represents roughly 70% of U.S. GDP? That's 70, but also represents roughly 17% of global GDP. Yeah, that's 17% of global GDP. That's only slightly ahead of the entire country of China. That's why it's important to do a checkup on the consumer. Recent economic data shows that the future of the U.S. consumer is not looking so good lately. One reason, rising interest rates, which are beginning to bite, as observed in the number of working hours in sectors selling big ticket items, such as home furnishing stores, travel, and used car dealers. As you can see in this chart, they've been dropping since 2016. Rising interest rates and credit tightening is also hurting the demand for consumer loans, such as for credit cards and autos. These have been dropping since 2013, even before the Fed began raising rates. This roller coaster ride for the consumer can't be all that fun either. It shows the credit card interest rates at the highest level in decades. We can see that credit card interest rates in, say, 2013 were below 13%, but now they're climbing up to 17%. And as you can see, going back to 1995, that's the highest rate in decades. What about the household credit crunch? This chart here shows that the household interest payments have been rising 15% year over year. And also notice that when we get to these levels, it's been followed very shortly by a recession. Not every time, but often enough to be a concern. And this chart here shows the number of delinquent bank credit card loans. We're just above 3%. Now, we're not at levels where we were in previous recessions, but the rise does raise some red flags. So we need to keep our eye on this one. So this is an interesting chart here showing the delinquency rate, which leads a rise in the unemployment rate. So as we can see here, the delinquency rate has been rising. So soon enough, is the unemployment rate going to rise? And is that going to be followed by a recession? Well, my answer is probably, but we're not there yet. So stay tuned. And this last chart here shows that millennials are facing more financial challenges when it comes to credit cards. They're in the lead. However, as you can see, every age group seems to be rising. So the question becomes, with all of these concerns facing the consumer, can the stock market continue to rise? Well, my answer for that is yes, but for only so long. So, again, stay tuned. And for today, that's ChewDog Charts. Thank you.